Hello, good morning, everyone. Welcome to our morning market update and the opening into our live trading room. Today is Tuesday, October 24th of 2017. My name is George Papazov. I'll take you through a quick recap here of the markets, what we can expect today, what's driving markets into this morning session, and how we could trade them and what to watch for on the open. There's some really interesting stuff we're going to cover today. All right. First of all, let's start out with the key earnings yesterday. Arconic is down 10.4% after missing their earnings. All right, and they have a new CEO. We also have Halliburton down 2.5%, warning of slower growth. So far, earnings hasn't really done well. Seagate, the hard drive maker, is up 12.6%, seeing gains of turnaround. Whirlpool is down 7.4% after hours, cutting its guidance. So overall, we had a little bit of a negative draw on earnings season, a little bit more negative than expected. That was bearish heading into, or not, I wouldn't say bearish, it was just a little bit more to the downside. All right, in today's markets, in Asia, Japan's up 0.5% or half a percentage point. Hong Kong is up as well. Actually, Hong Kong is down half a percentage point. China's up 0.2% and India's up 0.3%. So you have a little bit of mixed markets in Asia with some strength out of Japan based on the re-election of Abe. All right, Abe's regime is back in play in Japan, and that's really driven the currency, the yen, as well as the market. So you got a little bit of inflow of money there in the Japanese stocks. Everything else is pretty flat in the Asian session. In Europe, London's flat. Paris is up at 1/3 of a percentage point. Frankfurt's up 1/10 of a percentage point. Slow gains, pretty much moderate, and not as much movement in the European session. Sliding now into the futures here in the morning in the United States front, the Dow's up quite a bit, over 0.5%, which is a half percentage point. S&P's up 0.1%, Nasdaq's up 0.1%, and crude oil is up almost 1 percentage point to 52.31. And gold is down 0.1% to 1279.80. It's rebounding a little bit. Let's have a look at both those assets. Crude oil is trading now 52.40, so continuing the rally, 10 cents, and now over its overnight highs. And gold is 1279.20 after opening 78.40. So there's a little bit of a drive higher on gold prices. Crude is going through the roof and it's rallying, and we've been looking for that long trade for a long time. We traded it yesterday with some good results, and we're definitely going to trade crude today. After the bell today, we have the API inventory, the private data release for crude. So about 4:20, 4:30 p.m., you're going to see a lot of volatility there. So traders, unite. You have some opportunity to make some money. Today's economic calendar, we'll talk about what drove the Dow and why the markets are up pre-hours as well. But today's economic calendar, we have at 9:45 the PMI composite flash reading. That's going to be very important. The PMI is a pretty significant number for the United States. That comes out at 9:45. We'll trade it live in our room. 10 a.m. we got Richmond Fed manufacturing numbers. That's also going to be an important part, considering we got some manufacturing data out of China. So the market's going to be looking forward to the United States' manufacturing info as well. At 1 p.m. we have results of a $26 billion 2-year note auction. That's going to impact the bond market depending on how it was subscribed, what the bid to cover ratios were, etc. And there's a lot more to a bond auction than there is equity. Bonds are a lot more of a sophisticated trading vehicle than equities. It's a tough product to explain over YouTube update. Here's what drove a lot of the gains overnight. This morning at 7:58 and 7:30, we had two really big releases. Let's start with a big earnings number. The big earnings number came out of Caterpillar. They reported third quarter revenue of $11.4 billion versus $10.6 billion expected. That's a big beat of revenue. All right, that's $1.2 billion more than expected. That's some serious money. They also reported Q3 earnings per share of $1.95 versus $1.22 expected, and that was really bullish for the stock. It's up 7.7% pre-market trading here, and they raised. It's not, look, guys, sometimes traders look at just the earnings per share number of revenue and say, wow, it should be up or down. The more important part is not what it is. It's a nice surprise today, but the most important part is what happens in the future. What's the guidance? 2017 guidance is up. They raised it from 6.25, from 5.26 to 6.25 per share, earnings per share on an annualized basis. That's a significant amount. That's a pretty big raise. They also raised their cost reductions in Caterpillar, which would lead to more revenue ultimately. Therefore, this is a very strong release on the front, on the back, on the inside, any way you want to look at it. This company did well. Caterpillar, good for it. The CEO said that volume was 2.78, an increase of 83 million, or 3% from the third quarter of 2016 increase. So they have strong, they beat the guideline, they raised their estimates and future guidance. They're up 3% from the previous quarter. This company is doing really well. And he said the increase was primarily related to higher volume in Asia and Pacific and mining, and partially offset by decreases in Latin America and Caterpillar Power Finance. So that's what the CEO statement was, and that led the Dow's on fire. Caterpillar is a really big part of the Dow Jones. The Dow's up over 100 points before the opening bell. That's a significant move. However, keep an eye out on this. Look at the DAX. The DAX is a market. It's a German stock market. It's in Europe. European markets are not seeming to move with the U.S. equities. Euro stocks and DAX are lower. Meanwhile, U.S. equities are higher on this Caterpillar news. Two things to look for on the open. Will the European equities rally up to meet up the U.S. equities, or will we get the same kind of thing that we got yesterday? United States equities opened up a little bit firm. We got a little bit of rally action, and then whack, off came the volume and unloaded some big sell positions and just dumped it on the bids, and price continued to drop all day. Yesterday looked different. I don't know if you guys, if you've been trading long enough, you know, especially if you're day trading, that yesterday looked very, very different. Usually into the close, about 20 minutes before the United States closing session, around 4 p.m., about 3:30, 3:40, the guys who have more information within us, the algorithms, the institutional traders who see a lot of the stats, tried to bid the market up. They tried to panic bid it into the close. They tried to ramp up the futures to close strong, and they failed. They closed on the lows. That's a really big thing to notice, because what that's telling you is there's some more volume and there's some more steam that's moving on the sell side. In the last couple weeks, the buyers have had their way with their market. They wait for a little bit of dip, they start buying, and it recovers just as quick and off to new highs we go. Yesterday was the first time in a long time the traders got to see a weak close. And it's just a quick reminder that the downside's possible. I'm not saying we're going to go down 3 million points or anything. There isn't 3 million points to go down on the S&P. But what I am saying is, look out, because volume came out on the downside. It looks like some of the bears are waking up. Most of them are still in hibernation. But I'm telling you, it's such a fine line between a bullish market and then massive institutional volume just letting go massive quantities on the bid. At that point, forget about fading. The market's dropping. Forget about buying that dip. You're going to get absolutely savaged if you do that. You're going to get destroyed. And that day is coming. It may not be today. It may not be tomorrow. But you guys will see a day where the market drops 3-4% in one single day. Yesterday was the official record day, by the way, on that note. We've gone 242 days in the S&P 500 without a single day of a 3% move or more to the downside. That is the first time in history it's ever happened. So remember that. The longer that the drop doesn't happen, the more rapid that drop is, because there's more accumulation of longs. Long position traders, when they have to get rid of their stock, they get desperate and they sell that market, and it causes the price to drop. You guys might not remember this, but I remember darker times where there's big sell-offs and there's absolutely nobody bidding. Nobody bidding means everybody's selling on the bid. They're throwing on their inventory on the market and just selling the thing and just absolutely collapsing it. And then shorts pile on as well for more predatory action, and you got no buyers. Big trouble. I've seen it happen firsthand. I've traded through that. All right, I'm not trying to scare you guys, but I'm saying yesterday we started to see some volume come out. I still think there's a decent chance today we get a little bit of a bid off the open. And then when the European market closes, I think the U.S. will take it over. Remember, bullish markets, open weak, close strong. Bearish markets, open strong, close weak. Remember that. McDonald's, let's finish with McDonald's. McDonald's, ticker symbol MCD, reports Q3 earnings per share of $1.76 versus 1.75 expected. Slight beat there. Revenue is 5.75 billion versus 5.77, so they miss on their revenue number, but make a little bit more of earnings per share. Could be accounting magic. It could be expenses. Global markets are up 6% versus 4.5% expected. The CEO of McDonald's says the following: our positive comparable sales and guest counts across all of our operating segments during the third quarter demonstrate broad-based momentum throughout our business that builds upon our strong first half of 2017. I love how CEOs could talk a lot and say nothing. Vision 2020 is to add 2,000 new restaurants and accelerate innovation before 2020. So you guys look out for that. McDonald's reported, Caterpillar reported. You better be watching Caterpillar today if you're trading the Dow or equity index futures. Watch the Dow, watch the DAX. I think that's our correlatory markets. Good luck, guys. Have fun trading today. That's what it's all about. Have fun. I remember I spoke to someone this morning. The cost of inaction is great. If you want to trade at one certain point, you're never going to know when it's time to go live. You just never know. If you know it's time to go live, you're missing something. There's always going to be a feeling of risk. I've been trading a very long time, and there's some days I wake up and I feel the risk. I feel like I'm about to go in and risk something. That never evaporates. If you want to trade, you're getting into a career of fighting every single day of your life. There's no guarantees. There's no pensions. There's no 401ks. There's nothing. You're fighting every single day. If you like that, this job's for you. I love it. If I don't wake up to fight, leave me in bed. Take care, guys. I'll see you guys tomorrow morning at 9 a.m. And we'll chat a little bit more. We got some more earnings. We got a big day tomorrow. And then this week, we also have Mario Draghi and the European Central Bank. It'll be huge for currencies. Take care. Have a great day. I'll catch you tomorrow. TradePro subscribers, let's get in the room and let's do what we do. And let's kill it. Almost let a bad word slip. YouTube, see you later. Patented chair spin already happened. Can't count it down. Goodbye, guys.